You can build the perfect product, have a killer website, and still lose thousands because of one overlooked detail. Today's guest, Roger Pearson, is an IRS enrolled agent and has spent over 50 years in business, watching entrepreneurs bleed money they didn't have to lose. In today's episode, Roger breaks down the costly mistakes you might be making right now and how to fix them. Welcome to Gratitude Geek. I'm Kandas Rodarte, a productivity coach helping female solopreneurs over 40 reclaim your time, streamline your business, and create success on your own terms. Welcome, Roger.
Thank you.
So it's May, which means tax season is kind of over. How are you feeling?
Finally, I'm still recuperating.
What does that time of the year look like for you as a CPA?
Well, the time of year is basically the number of clients I have, and I can't lose any. They threaten me to track me down if I ever retire. But no, I have about 500 clients. So, it's 40 to 50 hours a week sometimes just to get everybody out the door in time. Because you got two filing deadlines. You got one for S corporations and partnerships in March and another one for everybody else in April.
Which, because I have an S corporation, I understand that's a little bit more stressful because I got to be done by March.
Yes.
Okay, so please explain what the difference is between an IRS enrolled agent and H&R Block.
Well, I mean, H&R Block is it's the number one tax preparation service in the country. It actually started the entire thing basically way back when, I think about 50 years ago. And I work with them I don't have my own tax office. A lot of people think I do, but I prefer to work through them.
You work through H&R Block?
Yes, I do.
See, I was just asking you a random question.
And I prefer to do that because if somebody has a problem during the year and I'm off, then there's always somebody there to take care of them. And I like to do that for my clients. I want them to always be, and my favorite clients, they have my private phone number. So if they do have a question during the year, they can call me up and I can help them out. That's no problem there. But yeah.
So you've been doing this for 50 years.
Well, I've been in business for 50 years off and on. I mean, I've owned lawn care companies, custodial companies. Never want to ever do that again. I hated them. I spent probably the first half of that 50 years, I'm being in my 70s now, learning what I didn't like to do and making all the mistakes that people make because I didn't have any training. I didn't have a mentor. I didn't have anybody, that would teach me because they don't teach you this stuff in school that you need to run a small business, unfortunately. And so for the last 23 years, I've been doing other people's taxes. And I learned about all the mistakes I made by having to do the education to help other people. So I've kind of made it my mission now to get that information out to people so they don't have to make the mistakes I did and so many other people do.
So tell us your story. Take us back to the beginning. How did you get from there to here? What's that story look like?
It was a long, long, long road. I mean, since I was, 20, I always wanted to work for myself. I always wanted to just build something and accomplish something great. And I tried so many things. I've tried the multi-level marketing route until I finally learned that that's a stacked deck. And I wasn't going to be successful there because most of them don't last more than 5 years and they're out of business. I tried starting my own companies. Like I said, lawn care. I did a custodial business. I spent 10 years in the restaurant business in mainly management, 4 years in the supermarket business, worked myself up to management. And then in 1989, I was introduced to computers. That's just before Windows existed, believe it or not. And I've loved computers ever since. I've learned that the two things that I really, over the course of all of that, the two things that I really, really enjoy doing is I love something creative and I love education. Because I initially went to college to be a teacher. But then they had me doing student teaching and I found out what the public school systems really look like. And I said, I'd be fired every year. I can't do this. They're not here to teach. They're here I don't know what they're there to do anymore. So I've been teaching in the corporate world a lot when I was in the corporate world. But in the 90s, I decided, well, all right, I want to go back and work for somebody else for a while. So I did software support for IBM and got into a nice management position. And then one day they called, about 3 years later, they called me and said, well, we've eliminated your position. Thank you very much. So then I found a job with a document management company. And this was kind of at the beginnings of document management back in the 90s. I actually built an entire department for this company. They started with 2 teenagers running it, where companies bring their documents in, you scan them, so they could destroy the documents, and built it up to about 25 employees in there. And then new management came in and said, replace it with all their people. And they said, thank you very much. Goodbye. I said, oh my God. Then I found a startup that was document management, and I went in there and I helped them build also. And then I found out the person running the company kind of absconded with all the investors' money to pay his own bills. And so that went belly up. And I said, this 3 times in 10 years, I was downsized. Essentially. And I says, I don't know what I want to do. And so my sister-in-law says, why don't you go take this tax course? It'd give you some part-time work until you decide what you want to do. And so I did, and I started out, and I decided I love doing this. I love helping people. And to be able to sit down and to help people was amazing. So I trained and I trained and I studied till I really, really got good at business, because that's my background. That's my passion. And I've helped dozens and dozens and dozens of people over the last 23 years save money in their business. And some of them become profitable. Some of them decided, well, after I told them what it involved, they said, this is not for me, and that's fine too. But you should learn those things before you lose all the money and make all the mistakes.
I love that you talk people out of being in business. About a decade ago, I was a guest on a show, and she asked me what advice I should give to somebody who's on the fence about starting a business. And my advice was, if you're on the fence, you shouldn't start a business because you're not ready.
No, it has to be a passion. It has to be just, this is going to work. I'm going to do this no matter what it takes. And
it doesn't matter if it's a network marketing company or an enrolled IRS agent helping with tax returns. You need to be passionate about what you're doing. If you're not going to do a good job.
Exactly.
Taxes. Tax season's over. What does it feel like when it's all done and the 15th has gone by and I mean, it's not really over because there's the October 14th is the extension date, but
right.
What does it feel like knowing that the hard part's over?
I sleep for a week.
That's a great answer. Self-care.
Yeah.
And what do you say to the folks who tell you that, oh, you're lucky because you really only have to work 4 months out of the year?
And that's not really true. I mean, for instance, as an enrolled agent, you have to take about 25 hours of continuing education during the rest of the year just to prepare for the next year, and
because the tax rules change every year.
Constantly. And I always tell people that I used to teach tax classes for the company also for several years until they went virtual. And I says, I refuse to be a virtual teacher. You can't learn anything in a virtual class. And I was always, it was amazing. I loved it teaching there because I like being an educator.
I disagree with you about not being able to learn anything in a virtual classroom. I don't think that's true.
Well, you can, but the problem here was when I had people in the classroom, I had them in front of computers where they could actually do the software while they were learning, so that when they got to the office, then they would be better prepared. Because I wouldn't teach the class. I would teach the office. Well, here's what you need to know to do the taxes, but here's what you need to know to work with people. And that's what I objected to. Was it's hard to do in a virtual because you've got exactly 1 hour or whatever it is to get in this, and it's so structured. And when I was a classroom, I'd go off on a tangent, but this is, an important tangent. This is what you need to do when you're sitting down in front of people. This is how you can learn the tax law to address a particular problem. This is how you can learn this particular tax law to save somebody money doing this, and that's what you can get into it. That's the way I taught. But I don't know, maybe I'm.
I think that there are different learners and different teachers.
There are.
If I wasn't sitting in the front of the classroom, I could not learn. Which is why I like learning virtually, because I'm in the front row.
I see. Well, that makes sense.
I'm right there, and there's nothing distracting me from the instructor because it's right in front of me. And I also, if I don't take notes, I don't learn. I have to be writing things down, or else I don't retain them. So there's some people can just Like, I don't have to read a book. I don't have to read the book. I can listen to the book to get the story. But if I want to learn something, I have to write it down so that I can, or teach it to somebody. But I mean, there's different learners, different learning types, different teaching types, and there's no one right way. We are a very diverse population.
Well,
We
that's
have
true.
diverse ways of coming at things.
That's true. And when I get into the education part of what I do, there's people that they're auditory learners. There's people that they have to have the book in front of them to learn. So you have to have different methods for different people. And when I started writing my books and podcasts and things, that's what I took into account. Well, I've got a book. I got an online virtual course, but they all teach the same thing, but they teach them in different ways, depending on what way you like to learn. Because I've got to get this information out to people, because here's the thing. I've come to the point in my life where I have found out what is important is not what you've accomplished in life. What is important is how many people's lives you've improved by the end of your days. And if you can look back and say, look at what difference I've made to other people's lives, then you've had a good life.
I'm in 100% agreement with you. So tell me about your books.
The book is called Mastering Business Basics, the workbook. And it basically has 3 parts to it. The first part is going through and teaching people what the differences are between all the different legal formats in the United States. The second part shows, all right, what do you take with all the information? How do you organize all that information coming at you from the various parts of your business to be able to use it in a way that's going to benefit you? All right. And the third part of the book goes into the tax implications of the choices you just made on all the different legal formats and the way that you organize your paperwork. So I call it the 3 pillars of building a solid business foundation. Because that's really, if you really, really, really are serious about building a business, that's what you need to know. Because, and people say, I have so many people, they say, I hear this, well, I'll just hire somebody to do all of that for me. I don't have to learn all of that. And so I asked them, if you owned a plumbing business, would you interview the person that you want to hire as a plumber to see if they knew what they were doing? Absolutely. Could you interview them if you didn't know how to do plumbing? No, you couldn't. You wouldn't know what questions to ask. You wouldn't know what the right answers were. And the same thing is, I think at some point you should bring an accountant and a tax professional on your team. They do not need to be the same person. In fact, sometimes it's better if they aren't, because one can check the other. And so
I don't agree with you. I think it's not at some time. I think it's from the very beginning.
Yes.
You should have a tax person and an accountant from the very beginning.
I do, because I get P&Ls in and things, and I'm going, something's wrong with this P&L. We have to go back to the accountant and figure out why these figures don't match right. And I do advise people that they should have a different one. And I have a lot of clients, they have an accountant, but they come to me for their taxes. And
I told this story recently on the show, but I'm going to tell it again.
Okay.
So my husband and I were refinancing our house, and who's the person, not the loan agent, or the person who gets the loan and looks at it. And it's not the agent, but the whatever. So she's looking at the bank return. For some reason, she wanted even though we have an S corporation and the corporation's income it should be separate from your personal income. It kind of angered me that they wanted our tax return for our business. But she was looking at our P&L, and she was looking at the line item for postage and delivery. And she was accusing us of lying about our income because our postage and delivery line item was so low. And I had to explain to her that she was looking in the wrong place, that she needed to look under cost of goods sold, outbound freight, and that was the actual cost of shipping. And the fact that I had to explain to her, this person who was making a decision about whether or not we could refinance our home, that fact, I had to explain to her how to read it. I hope she remembered that lesson. But if I hadn't known how to read my P&L, if I hadn't have known how to read it, I wouldn't have been able to explain it to her.
Exactly. That's why you need to learn all this stuff,
And understanding that cost of goods sold includes outbound freight, which is, there might be a lot of business people who don't know that. People who own a business.
I'd say the majority don't. Really.
But it changes your net income,
yeah,
which
it
is a good
does.
thing.
It does change your net income.
Do you want? Okay, so the whole purpose of this conversation is talk about where people are bleeding money, and net income is one of those places where people aren't understanding that their net income doesn't need to be a lot of money. Well, okay, I'm saying that wrong. That their net income can be, interpret what I'm trying to say about net income.
Well, I mean, their net income can be low, especially on your S corporations, because you have to W-2 yourself, and depending on how much you W-2 yourself really depends on how much net income you're going to have. I don't advise people to pay themselves to get a low net income, because that's the net income coming down your K-1 is not subject to payroll taxes. So that's a significant savings, So, and the IRS says, well, you should W-2 yourself, well, you'd pay other people to do your job, or between 40 and 6% of your net, which is why you should always know what your net is any time of the day or night. You should be able to push a button and know. So that's one significant savings. Mistakes that I find most people make are they don't understand depreciation tables. They don't understand basis. They don't understand mileage, and how you keep track of all this stuff and what you do with them can make significant differences. So the mileage, you can take standard or you can take actual expenses, and it depends whether the company owns the car or whether you own the car, and have an accountable plan for reimbursement. People don't understand that part of it either, most of them. The basis, people don't understand. You have to keep track of your basis. So what's the basis? The basis is how much skin you have at the game, basically. It's just how much you've invested into your business. When you make profit, it increases your basis. When you lose money, it decreases your basis, but you cannot take a loss on your personal tax return in excess of basis. And a lot of people have been breaking that law for years. So now the IRS is requiring that if you have a loss, you have to report your basis. So that's another decision that has to be made. Make sure you've got that in line now. The other part I made is depreciation, and people don't understand depreciation. Most people don't. And it's basically, if you buy equipment in excess of $2,500 and it has a lifespan of more than a year, then you're supposed to claim that deduction over a period of years. For instance, a computer system is a 5-year property. So you would technically divide it up and claim it over 5 years. Or equipment and furniture, 7-year property. So you can do that. That's the standard thing. But what I always tell people, and what I always told my students, is that the good tax preparer is not the one that knows all the rules. The good tax preparer is the one that knows all the exceptions to the rules. Because in the tax world, practically everything has an exception to it when it comes to credits. So the thing about...
And every state affects your federal return.
Exactly. So, I mean, there's things like Section 179 and special depreciation and so forth, where you can accelerate that depreciation in the current year. So the good tax preparer is going to sit down. They're going to look at your P&Ls, your profits for this year. They're going to sit down and they should be asking you, what's your projections for the next 2 years, the next 3 years? You got a big contract coming in where you're going to be making a lot more profit next year. We need to shift as much of your deductions then into next year when you're going to need it more than this year. Say you had a great year this year. Well, we need to accelerate some of those depreciations in this year and take less of them next year. This is what the big corporations do. This is why they hire all those accountants and tax professionals at IBM and all the other places.
And really, the S corporation was created so that small businesses could do the same thing big businesses do.
Exactly. That's exactly true. That's the discussion every year that I have with my clients. If they're buying equipment of any kind, if they're making capital investments, this is the conversation I have to do. All right, let's look at our net. Let's see how we have to adjust it to get you the best possible situation, not only for today, but for next year and the year after that. And that's what a good tax professional can do for you. That's why you need to know this information so that you can hire the right one that will have those conversations, and you can have an intelligent conversation with them knowing what they're talking about.
Okay, so what is some advice? I want to get into how to find the holes that bleed the money. But first, let's talk about, how do you hire a good tax professional? What are some tips for hiring the right person?
Well, the first thing that I always tell people, if you want a good tax professional, it's going to be somebody that's going to sit down, you're going to interview them, and they're going to interview you. because I find if I'm going to do a good job for my clients, I have to learn their business. If I have a painter coming in, I have to learn the painting business. I have to learn the plumbing business. I have to learn the landscaping business. I have to learn how they do business and how they categorize expenses, and then correct any of that happens to be wrong, but to give them a better view of their overall expenses to find out where they're bleeding money. Because if you just lump things into miscellaneous, I can't help you. I can't help you see where you could increase your profits by maybe eliminating things that you shouldn't be spending money on.
So your advice is to don't just hire somebody, make sure you interview them. And during the interview process, make sure they're interviewing you.
I think it has to be a two-way. You want a tax professional that has a two-way conversation with you, They should be teaching you as well, I think, as them learning your business. So it's a two-way street. And the more you do that, the more you can help each other. For instance, I had one gentleman who wanted to buy the house he was living in, But when you're self-employed, it's hard to get a loan. It's hard to get a mortgage when you're self-employed. They want 3 years, and the 3 years have to be within a certain range. So I helped him, and we used depreciation and all kinds of other things, but I got him in the range he needed to be 3 years in a row, and he was able to buy his house. But that's the type of things I love doing and helping people with, They tell me what their goals and their plans are, and I say, well, this is in my capacity and my knowledge, this is where we need to go to help you achieve that. Whether they do it or not is up to them, of course, but that's the type of relationship that you really want with your tax professional.
So you really are a partner with the person.
You really have to be. That's what you're looking for. And so you have to know enough about taxes and that you can have that conversation. That's why I keep emphasizing education for so much,
And just understanding, being educated. A lot of folks say, well, I can just hire somebody to do that, but you can't hire somebody to not be stupid, right? Or I didn't say that the way. I'm not accusing you of being stupid, audience. I'm just saying you need to know enough to be able to know that the people that you hire are doing a good job.
Exactly.
Which means you need to know how to read a P&L and a balance sheet and understand cash flow and all that. Okay, so let's talk about the bleeding. Where are most small businesses bleeding money?
Most of them do it by not keeping paperwork. Seriously, I mean, it's just I'll come with somebody that has the mileage deduction is the greatest example, especially first year, and sometimes they don't listen to me, and it comes the second year, but they don't keep track of their mileage in a proper way. I've had to go into audits for people, and one of the first things they ask for, where's your mileage log? If there's mileage on that return, where's your mileage log? If you don't have it, they can disallow the entire thing, and that is one of your biggest deductions on a taxes, because they're very generous on the standard mileage,
What is it this year?
It's 70 cents a mile.
Holy moly.
Yeah, it went up 3 cents. I mean, 70 cents a mile is a lot more than you actually spend. It's always more than you spend. It's a great deduction.
So where's another place that businesses bleed money?
It's just the biggest things. That's one of the biggest things. The depreciation is a big thing. And a lot of times people just don't understand the other things. It's just sometimes, for instance, the mileage, or not mileage, meal deduction. If you take a client out, you can only deduct 50% of the cost because they figure, well, 50% of it's yours. You can't deduct your own meal. So, a lot of people don't understand that. And they'll take all kinds of clients out, and they'll take them to fancy places and everything else. And they'll spend a fortune. And the tax time comes. And guess what? You can only claim half of all that money you spent. You probably could have taken them to a less expensive place, had just as good of a business discussion, and saved yourself a whole lot of money. There's just little things like that are different on the books than they are on the tax return, where you can't deduct the entire thing. I have people like S corporations. Oh, they decide to give all this money to charity. Well, that's not a straight deduction. That flows down to your Schedule A. And if you can't itemize on your personal taxes, then that money it's gone, and there's no tax advantages to it. So you have to understand all these little nuances like that.
So if the business, if you can't itemize it on your personal taxes, are there still advantages to making contributions to charities?
Besides a good feeling? No, not in the tax world.
In the tax world.
The only legal format that can claim it as a write-off is a C corporation. None of the flow-throughs can.
Okay, but it's still not a bad thing to do.
It's not a bad
Just
thing.
because you aren't going to be able to deduct it doesn't mean you shouldn't do it.
You never know where the next client's coming from.
So I don't know if you're up on the latest news, but Bill Gates just announced that he is going to give his fortune, $200 billion, to charity over the next 25 years. What are the tax advantages of that?
Well, he's probably, there's a limit on how much you can claim per year, but I'm sure it's going to help him a whole.
So let's talk about legacy, because that's one of the things that a lot of businesses just don't. People who own businesses, they only think about today and they don't think about the future. And Bill Gates is an excellent example of laying out the future, determining he's going to give away 99% of his wealth. So he has determined what the next 25 years are going to look like. He'll be in his 90s by the time that the 25 years are up. But he's determined what that money is going to look like, what that distribution is going to look like over the next 25 years. And he has the ability to do that. But a lot of business owners, they can't see past next month. So talk about that.
Correct. They can't. And that's something you could think about, you should think about. And a lot of it depends whether you have any of your kids in business with you, for instance. I mean, those are especially things you have to think about then. What time do you bow out and let them take the reins and things like that? And a lot of people don't think about things like that, and they should, and they shouldn't. And that's going to make a difference in how you structure your business also. I think it's going to make a big difference in how you structure your business. When you have
okay, so let's talk about business structure. I do not recommend to anybody to be a sole proprietor. I recommend that you at least be an LLC. Do you agree with me?
Absolutely. And a lot of people are very confused about what LLC is. They think it's a corporation. It's not. It's a limited liability company. And all that does before and a lot of people don't understand also the LLC, limited liability companies, is a state designation. The federal government doesn't recognize it, So if you're a single member LLC, you're taxed as a sole proprietor at the federal level. If you're a multi-member LLC, you're taxed as a partnership at the federal level. And all the LLCs, before LLCs came around, and it took about 10 years before all the states individually created this type of entity. All it did is before that, if somebody sued your business as a sole proprietor, they could attach your personal assets. If they sued your partnership, they could attach all of the members' personal. So what the LLC basically, all it does not change any tax structures per se. What it does is it changes the legal structure to where you now have limited liability protection like the corporations do. So they can break that if it's malfeasance or something like that. A court could take it away, that protection away, but that's very rare. But everybody should be an LLC.
What are the tax advantages?
There are no tax advantages to it.
So there's seriously no tax advantages to choosing not to be a sole proprietor.
There absolutely is. A sole proprietor is responsible not only for all of the profit on their tax return, they also have to pay 15.3% payroll tax on their profits. Is the most taxed other than general partnerships. It's the most taxed there is out there. Whereas on the S corporation, you only have to pay that 15.3% payroll tax. You don't have to pay it on the profits coming down on your K-1. You only pay payroll tax on the amount that's included in your W-2. That can be significant savings,
So that benefit kicks in at the S corp level.
At the S corp level.
And an LLC can choose to file as an S corp.
Absolutely, and that's the other thing a lot of people don't understand. That you can choose, you can file as a C corporation if you want to. It doesn't matter to the government, as long as they have their paperwork right. A lot of people don't understand about the IRS. They don't care about your money. They don't care about the money. They care about the paperwork. As long as the paperwork's fine, they're happy. It's not their money. They don't care about the money. They care about the paperwork. That's their job. So, but you can file. And I have a lot of people that they're sole proprietors and their partnerships, and they file as S corporations simply for the tax advantages. The S corporation is really one of the few legal formats that really gives you any advantage as far as taxes go. And it's simply because of your net profit is not taxed for payroll taxes. That's significant. I had a new client that she became a home chef, and she must be very, very good because she made $100,000 first year, and she was going to owe $6,000 in taxes. taxes because she was a sole proprietor. And she came to me in time that I could use one of the exceptions to the law, and we got her into an S Corp, and it saved her, well, they got a $2,000 refund instead of a $6,000 bill.
So it saved her $8,000.
Yes. Yes. I love doing things like that. That's the fun things.
That's the thing that's so hard for me to explain to people, because I don't know how it happened. I just know that my CPA saved me $5,000 the first year I was in business. And I don't know how to explain that because I'm not a tax person. I'm just saying it's because we chose to be an S Corp. Well, what does that mean? I said, well, I'm not a business advisor in that I'm not a tax advisor. I'm just telling you that you should talk to a tax advisor and figure out what is the best form of business for you.
For the minimal cost, like, I don't know what it is. The costs are different in every state. So I know, like here in Florida, LLC costs you $138.50 a year to be registered with the state. That's it. And there's no additional taxes. When you get into, of course, S corporations, there's additional taxes because you got the cost of the additional tax return, the business tax return. You've got the cost of payroll and unemployment and all those things that have to be paid. But it doesn't really get that far ahead when you figure in the extra expenses. Now, if you're not making money and you're sole proprietor, then there's no reason to go to an S corp. But when you're getting up $20,000-$30,000 a year profit, then you need to make the switch. Because then you would save enough to justify the extra cost of doing the extra paperwork.
So what's the number?
There is really no number. There's no definitive number. Some people start out day one that way, and that's fine too. There's some states, I know in Florida, for instance, there's some of the constructions, they have to be a corporate. They won't let them run under the sole proprietorship. They have to be at least an S corporation or C corporation to be able to license in the state, and for liability reasons. So there's those state considerations also.
And every state's rules are different.
Every single one of them.
I haven't done my own taxes in 27 years because I don't know enough about them to feel confident. Doesn't matter how much money I make. I don't feel confident doing my own taxes because the rules change every year.
They do. And if you feel comfortable, you shouldn't be doing them yourself. You should budget the cost of doing your taxes into your long range plans.
Exactly. It's a line item in our expense, in our budget. CPA, professional advisor. Actually, the line item is professional advisor. What's the most unexpected thing that you have learned as a business owner over the last 50 years?
How much I didn't know, even my management position, when I got into doing the taxes, even my management positions that I had, did fairly well at. If I know now what this part of the structure of it, I could have been such a better manager. And I tell people in management, a lot of people think, well, you should learn all this basic information just if you're going to run your own business. And I tell them, no. I tell you, if you want to be a manager and you want to go up the ladder in management in a company, you need to know this also, because you make yourself more valuable to your employer. You understand the reports that are coming in front of you better, and the more valuable. You could find something that'll save your employer some money and present that to them. You're going to be a real valuable employee to them, and you're going to go up the ladder faster. So it's not just for self-employed people that need to learn basic structural information. It's also people that want to go in the management ladder.
What are 3 things that a business owner can do right now, like today, to make sure that they are they're plugging up all those holes that are bleeding money so that when they file their taxes in March, that all is going to be groovy?
I think one of the first thing you can do, you really ought to sit down and make sure you have a good handle on your chart of accounts, and that you're categorizing everything properly, and that you're documenting those categories properly. Because if you're not, whoever does your accounting or your taxes is not going to know it. They're not going to know it. They're saying, hey, what happened to the receipt for such and such? Well, they don't know you have that receipt. And so you really, really have to nail that part of it. I think that's one of the biggest problems. People don't nail the paperwork part of the business. They're just too lax on it. And it's going to come back to bite you. That's the biggest thing.
Anything else?
So the other thing, as we've discussed, is find the right people to put on your team. Find the right accountant. Find the right tax pro. That's vital. That's vital. It's going to take you a little work, maybe to find the right one. You may have to look at several people, and that's fine too. It's just like I have people ask me Can you recommend a good accountant or whatever? And my select list of people I would recommend is very, very low because I have to personally know these people and I have to know the outlooks and I have to have read some of their P&Ls to find out if they know what they're doing or not. So you have to be very careful when you're taking just don't assume somebody's good because it's referred to you. Go find out yourself. Go find out yourself. That's the best thing that you can do. And the third thing that really people really need to understand is capital expenditures. When you buy equipment, when you buy buildings, all of that stuff, you really need to get that under your belt and learn how to work the system when it comes to capital expenditures, because that can save you a lot of money if you do.
So when my husband and I started our business 28 years ago or whatever, however long it's been a while, I went and took a couple of accounting classes and a business law class at the local community college so that I could understand those two very important things. If somebody doesn't have 2 semesters to take college courses right now, where can they go to learn how to read their financial statements?
That's actually part of the book I've just finished writing. It has a whole chapter. It is a chart of accounts, reports, all of that. All the things I've accumulated in 20 years, I've tried to put in.
You said you just finished writing it. Does that mean it's not published yet?
It goes live by the end of the month. It's under final review, and then I send it off to the publisher. They tell me it'll be out 2 weeks later.
Okay, so this episode is going to go live towards the end of May, which means the book will come out after the episode goes live.
No, it's going to be on the shelf by the end of the month.
Do you have a link to pre-order?
You can go to, if you go to my corporate site is Seagull Technologies. Seagull spelled like the bird, technologies is plural, /.com/books, and it'll take you where you need to go.
Okay, that link will be in the show notes. This is episode 272. No more there's a lot of ways that people can bleed money. Did we cover everything that somebody needs to know right now?
Probably haven't covered everything, but I think we've covered the major things.
Okay. So I expect, listener, that next year you will save a lot more money on taxes if you follow the advice of Roger Pearson. So, Roger, this is your moment of gratitude. For whom and what are you most grateful?
Most grateful? Well, besides being still alive? No, I'm just grateful that for all the people that I've gotten to know over the last couple of decades and the ways I've been able to help them. That's all the satisfaction I need. It really, really is.
Thanks for tuning in to Gratitude Geek, the podcast for grateful micropreneurs building genuine, lasting relationships with clients, colleagues, and community. Our theme music is by Rev Brock and Soul Lily. A huge thank you to our guest, Roger Pearson. You can find his links in the show notes at gratitudegeek.com. Again, this is episode 272. I've been your host, Kandas Rodarte. Stay groovy, my friends.
Stay groovy, my friends.